Hi, Jose. How are you?
Hi, Patrick. Thanks for the invitation and thanks for having me here at LATAM Stocks.
Yeah, I'm really excited to talk to you. I think you cover a really interesting niche as an equity analyst. So why don't you introduce yourself to listeners, tell them a bit about your background, where you're from, and then what you cover professionally.
Perfect. Well, my name is Jose Luis Bezies. I'm an equity research analyst here at Mexico City. I cover retail and food and bev Mexican equities at Valmex, which is a broker, dealer, and asset manager based at Mexico City. And all my life, I'm here at Mexico.
Okay, cool. So you cover specifically food retail and food companies as well? Do you do some of the producers or mostly the retailers?
The retailers and the food and bev, I mentioned Bimbo, Gruma,
Yeah.
and that kind of stuff.
Yeah, I think a lot of listeners. So maybe we'll level set a little bit and talk about Mexico's, food and food retail industry in general. Because I think a lot of listeners, especially the American ones, will be surprised how big of a presence these Mexican food companies have in the U.S. Like I covered Gruma a few years ago, and they're huge. All the tortillas that you buy in the grocery store in the U.S. are Gruma. They're Mexican.
Yeah, basically the most important market for Gruma nowadays it's the US, so it's a very important region for their consolidated results.
Okay. So then what's the general state of Mexico's food and food retail industry? Is it a good time to be a Mexican food retailer, or is it a difficult time? How's the consumer? Can you maybe just level set about the industry in general?
Yeah, well, I think it's a really highly competitive landscape for retailers in Mexico. I could mention some factors that have been characterizing this sector in the last years. I think that the most important would be the customer, which is a little bit more cautious given the economic conditions that we have just experienced in the last couple of years. Although in Mexico, we have something interesting. We have customers with a higher disposable income due to several factors. For example, the delivery of social programs by the government that have been mostly from the last administration, and it's expected that this administration, just elected in June, will continue with this delivery of social programs. And also, there has been some constant but gradual increases in the minimum wage. So we have a higher disposable income, but a consumer that it's not so, it's more cautious for its spending. We also have the most known factors such as very aggressive promotional activities and campaigns. Also, post-COVID-19, we have this adoption of new omnichannel ecosystems and online sales for their main operations for the retailers. And recently, we have the participation of some retailers that are more focused on a hard discount business model, and that has been a really quite fierce competition for the regular retailers here at Mexico.
So who are the biggest retailers then in Mexico? Are they all domestic names? Are there major multinationals? Like is Walmart a big retailer in Mexico? Who are the big players?
Yeah, well, as you said, Walmart would be the main player, I would say, Walmart of Mexico and Central America. And by the way, that company has a significant weighting in the Mexbol, which is the main index here at the Mexican Stock Exchange. That would be the largest player, and I think that the most important, but there are several other smaller players like Chedraui and La Comer, which are more niche retailers and that have been capturing the attention of local and international investors. This in a way that their stocks have been recently added to the sample of some indexes, just as the Mexbol or even the MSCI Mexico Index. Chedraui's stocks were added just a couple of months ago. So this always backed by strong results in the last couple of years. And I think it's important to highlight because it captures the attention of international investors as well by local investors.
So who are the major discount retailers then? Are there dollar store type companies that come in and compete at a super low price level with the more normal retailers?
I think the most important player nowadays in Mexico in the hard discount business model is Triple B, which just made the IPO last February there at the US. I think that's the main competitor for some proximity formats of these bigger retailers. I don't know, Bodega Aurrera for Walmart, it's like the main competition for Triple B because their main scope or offering it's on the price level. So it's a fierce competition in that sense. So it's interesting for an analyst to have like this big scope of the market.
It's funny. You just reminded me of a research report I read maybe a year ago when you mentioned discount retailers. And there's a company called Pesorama, and I put them on my watch list. And I just looked at them, and they're like this 12 million Canadian. They're on the Toronto Stock Exchange, and they're like a Mexican dollar store. And I don't know how that research came up, but whoever did that was ahead of his time, I guess.
Yeah, like a common type, like a Dollar Tree or that kind of.
Is Dollar Tree or any of the big American ones present in Mexico?
No, I just follow also the retail market in the US, but it's like a similar competition, no?
Same business model, basically.
Yeah.
Okay, well then, let's see. Before we get into the specific company FEMSA that we're going to cover, let's see. What else can we cover for general market stuff? I guess you mentioned the new government's expected to continue with the food subsidies, so that's good. Is there anything else you expect out of the new government that might impact retailers?
All in all, I think consumption, even though we have seen like a mixed performance in the first half of the year and in this following 6 months of 2024, we have to remember that 2024 was an election year here at Mexico. So there was a greater spending in the previous 6 months before June's election. So there was a real great number of public expenditure, these social programs that were delivered to the population. And that was the main reason or driver for a really strong consumption in Mexico. And what are we seeing nowadays? It's a more normalized trend in consumption. It's still positive, but it shows quite a deceleration in some key indicators for the consumption. And I just want to highlight that I think personally that even though this softer environment in consumption, it's quite evident in Mexico, there are several factors that are still in place that I think will back these consumption trends. For example, we were just mentioning the increases in the minimum wage. This is expected to continue, so this will be the back for consumption. Also, the social programs will be delivered for the next administration, and or that is expected. So it also will be a positive factor for consumption. Maybe remittances, that it's an inflow that it's very important for the Mexican families. It remains in high levels, and I think this will coupled with significant depreciation of the Mexican peso against the US dollar after the election will be one positive trend for consumption. And well, in an expected scenario of lower inflation levels and lower rates, I think there are conditions to think that the landscape for consumption is still pretty solid in Mexico going to 2025.
Interesting. So it sounds like there's no reason to be overly optimistic or pessimistic, kind of just a normal positive growth trend, kind of slow and steady, pretty standard, nothing crazy.
Yeah, I think that's fair. Low and steady. Yeah.
Yeah. Okay, great. So anything else you want to mention just about the general landscape before we get into FEMSA?
Well, although FEMSA is not a pure retailer as maybe Walmart, Walmex, Chedraui, La Comer, or even Soriana, which is another retailer in Mexico that trades the Mexican Stock Exchange, I think FEMSA is a pretty quite interesting name to talk about because recently in February 2023, they just defined their new long-run business strategy called FEMSA Forward, which mainly focuses on three main divisions, which are beverages with Coca-Cola Femsa, FEMSA's bottler. Also in the retail or proximity division, they have OXXO, which is their main format as a convenience or retailer store. And it also has an interesting division that not many times we talk about. It's called Digital FEMSA, that it's mainly focused on the several digital and financial initiatives that are implemented in OXXO stores and in their ecosystem. So it's quite impressive, and it's interesting to dig some details into also that division. And well, as I was saying, it's not a pure retailer, but the results of these divisions gives you a real clear stance or vision of the consumer consumption here at Mexico.
Yeah. So let's take them one by one then, because we'll get to OXXO, but let's cover the classic Coca-Cola bottler first, because I think a lot of value type investors will know that business model pretty well. It's pretty famous. Warren Buffett, talks about it for decades. So FEMSA is the largest in the world in terms of the region they cover. They have the most people of any Coca-Cola bottle in the region. Is that correct? Or is that
Coca-Cola Femsa, which trades with the ticker COF-UBL here at the Mexican Stock Exchange. It's the most important bottler for Coca-Cola company products in terms of volume. It's the largest bottler in terms of volume in the world, so it's quite a relevant participant in the bottler arena for Coca-Cola. So it's a division that recently have been the most important for FEMSA's consolidated results. That has not been the case in recent years. When we talk about FEMSA, I think the first impression or the first idea is OXXO. But in the last couple of quarters and the last year, Coca-Cola FEMSA, the bottler, has been the most representative division in consolidated sales and EBITDA for FEMSA. So I think that's important to highlight as a pretty particular remark.
So there's two separate ticker symbols then that trade in the US. Is that correct? So there's Coca-Cola FEMSA, and then there's FEMSA, which owns a portion of Coca-Cola FEMSA. Is that correct? Can we clarify those?
Yeah. Coca-Cola FEMSA, it's the bottler. It trades under the ticker COF-UBL, and FEMSA, which is like the parent of these companies, it trades under the ticker FEMSA-UBD.
Yeah. So in the US, I'm looking at them. So the holding company or the parent company, FEMSA, on the New York Stock Exchange is FMX, and then just the bottler is KOF. I didn't even, okay.
Yeah.
That makes sense. So cool. So what else about the bottler then? So it's demographic growth, basically. I mean, is it a pretty standard Coca-Cola bottler where they'll raise prices a little bit every few years? The subsidies impact, what's the outlook for them?
Yeah, well, recently there has been a little bit of softness in volumes, principally because of several headwinds like unfavorable weather conditions in Mexico. And also in Brazil, they experienced a temporary closure of a facility in Porto Alegre because of several significant floods in that region that affected that region in Brazil. And we have to consider that Mexico and Brazil are two main markets for Coca-Cola FEMSA. And even though this has flattened somehow the volumes, in a consolidated basis, they have been posting resilient volumes, even when compared with the competition, no? I think it's important to highlight that this bottler operates in two regions, Mexico and Central America, with countries such as Guatemala, Panama, Costa Rica, Nicaragua, and in South America with operations in Brazil, Argentina, Colombia, and Uruguay. And roughly speaking, these two regions, Mexico and Central America have the 60% of sales and EBITDA, and 40% comes from South America. So the Mexican and Central America region still holds as the most important for Coca-Cola's FEMSA results.
And has the volume decline, has that impacted their financials severely, or are they still okay? Margins are still okay?
No, they have offset this decrease in volumes via pricing. And it's important to highlight that, it has been more relevant recently, Coca-Cola FEMSA, than the retail division for FEMSA as a whole, because it has been able to deliver really impressive profitable gains by margin expansions at the EBITDA level. So I think that's important to highlight. It's quite impressive, the operating momentum that Coca-Cola FEMSA shows recently, and that I think it could continue maybe in the short run, but it's impressive due to by comparing to to the competition that it has not the same momentum or the same strong top line growth, even though this decreasing in volumes, that it's a condition that affected all competitors in the sector.
And then how do you feel about their balance sheet? Are they leveraged? Are you comfortable with their cash position? How's their balance sheet?
They show a pretty solid balance sheet. It's a strong cash position. It's not so debt in their balance sheet, and it also delivers a constant and gradual cash delivery to investors via dividends. So there's no problem in that sense, and it's not a company that is so enrolled in the M&A or market consolidation, because the opportunities here at LATAM are not so easy to find. And well, the valuations, when one appears, it's like in the high range of the valuation. So it's not so common for Coca-Cola Femsa to be enrolled in any M&A opportunity.
They're pretty consistent, I guess, right? Because the parent company doesn't, if they want to do something like OXXO that we're about to talk about, they do it at the parent company level, I guess, and they leave the bottler to be a pure play bottler.
Yeah. I think that the most recent M&A activity was going out from Philippines some years ago. So and there have been nothing more in that scope for Coca-Cola Femsa. So it's pretty steady.
What's that story? I missed that when I read the research. They bought a bottler in the Philippines?
Yeah, they had operations in Asia and the Philippines, and this has a lot of years ago. They just went out of that market because it was not so profitable, or was not so attractive for the business model that was forming here at LATAM. That the two regions here are really pretty solid.
Yeah, LATAM's pretty big. Right.
Yeah.
So anything else about the bottler before I ask you about OXXO and the holding company or the parent company?
And maybe, highlighting that in general terms, Coca-Cola Femsa has been more relevant in the last quarters and in the last year for Femsa in a consolidated term. So I think that's important to highlight.
Okay, cool. So let's talk about the parent company and OXXO, OXXO. And
OXXO.
I'll set the stage because I know I have a lot of Brazilian listeners too who, if you're from Sao Paulo and work in finance, you've seen these over the past 3 years start to grow like weeds in Sao Paulo. I think they went from nothing to over 500 stores. I mean, my sister-in-law mentioned like 2 weeks ago to my fiance that, we're getting an OXXO. So it's like people know about it now. And when they started building them, I would walk past one every day. And I would go, why would you put a convenience store here? Like, this is dumb. I'm never going to go in there. And 2 weeks later, I would stop in 3 times a week to spend $1.50 on a Gatorade or something. And they're really good little businesses. So can you tell me the story behind OXXO and what is it? What was the concept? How did Femsa end up owning it? Did they found it?
Yeah, OXXO is the most known brand within the Proximity Americas division of the retail division of Femsa, and it was launched in 1970 here at Mexico, and it covers approximately 85% of the population of Mexico, considering as the last quarter that it has a vast footprint of 24,000 stores along the Mexican territory. And as you said, they replicated this business model in several countries in LATAM, Brazil, one of them with OXXO Brazil. And it's important to highlight that capacity or capability of the management to exploit that expertise they have with these convenience stores and launching in quite a few moments and in a really short period of time, and they have a really great success, as you were saying. The frequency of the traffic to the store, it's like the key for the success of these formats. Yeah,
something just clicked when you said that, because I thought the same thing, mentioning management, but they must know the convenience store market in the markets from Femsa, right? Because the Coca-Cola bottlers, that's their clients, so they know it as well as us. So they know exactly what they're doing when they put a store where they put it. They're not just it's not growth at all costs. They know what they're doing.
Yeah, precisely. They have like a critical eye for the location and the look and feel for the store, that which are really spotting. The red and yellow colors are really characteristic of this brand. So I think they made a great job there in the locations, in developing these brands from zero to great levels in these countries.
So what do the unit economics look like then? Are the stores highly profitable? Do they disclose that? I don't think I saw it when I went through, but do they talk about unit economics at all?
Yeah, well, in general terms, they talk about several metrics for OXXO. For example, the same store sales in the stores. Also, traffic and price are disclosed to have like a little bit more of sense in the top line growth. And I think it's important to highlight this for OXXO recently, given this deceleration or normalization of the consumption trends in Mexico. And I think in most parts of the world, the same-store sales indicator for OXXO have been decelerating. And in a way, it has impacted the top-line growth. Also, this compounded with lower traffic in stores. And basically, all the growth in the top line have been from price. So that's an important dynamic to highlight. And I don't know if you just knew, but they are trying to enter US with a format very similar to OXXO after they just completed an acquisition with Delec Holdings of 249 convenience stores in Texas. So that would be like South America, Mexico, and Central America, and now U.S. operations. This has a couple of months that have been announced, but it's just all parts or all these steps that they have been defined with this FEMSA strategy business model that was launched just last year. So it's quite impressive also that the capabilities of the management to clearly focus on the core business, to identify which ones are like the most profitable, the most major exposition, and divest the businesses that were not so profitable or were not so core for the business. I think the most relevant divestiture was the Heineken participation they had, and it was sold last year. So they were not focused no more in the Heineken business, and they just focus on retail, on the beverage, and also on the digital services.
So with top line revenue kind of declining in Mexico, and they're starting to focus really heavily in Brazil and now the US, have they reached saturation in Mexico kind of, if they already cover 80% of the population or 85%?
Yeah. I think in a sense that's a pretty correct way to see it. However, I will take into consideration a participant that maybe it's not also a pure retailer. It's a hard discount retailer, Triple B, and that participant opens stores really at a faster pace than OXXO. And OXXO or FEMSA, it's a company that really opens stores in a pretty fast pace, and having a competition or a competitor that it's pretty new in the arena, and that its store openings is faster than yours. I think in certain way it's correct to say it. There's a certain cannibalization of the formats and of this type of stores, but I think it attends a little bit more on several consumption dynamics. We were talking about the weather. We were talking, also OXXO comes from a pretty strong or difficult comparable basis. And also, there was a certain calendar effects and several externalities, like they were not allowed to sell alcohol before the elections for several weeks. Mm-hmm. So alcohol and this category of products, it's really important for the store. So these headwinds have been impacting the top line. But I think that the company's strategy still supports and still shows a sustainable and positive growth in top line. Maybe not by the most preferred reasons, same-store sales, volume, just pricing, but it's still positive. I think it shares this idea that I have for consumption. OXXO, it's not in the better terms, but it's in a positive and steady trend.
Yeah, that's crazy to think a company is competing with them opening faster. Because I mean, I told you I've seen in Sao Paulo. It's like it feels like they're up. The stores are up and operating in weeks. I don't know how you could do it any faster, honestly.
Yeah, well, this competitor has they are not so detailed stores. They are like more hard discounters. They really apply this concept to the look and feel of the store, even though they, depending on the region, they adapt the format to several regions, if it's a lower income or higher income region. But on the main, they really apply the hard discount business model, even to the format of the store.
Do they break out information on how they're financing the store growth with OXXO? Are they taking on debt, or is it organic growth at this point? Yeah. How does the financing work to grow as fast as they're growing?
Yeah, well, FEMSA particularly has a pretty robust cash position, and I think that the deployment for capital allocation in terms of OXXO openings, it comes from it. This cash position has been even become stronger with certain divestments that have been it has applied in the last couple of months. All parts of this FEMSA's forward strategy, they are divesting in the businesses that they are not interested in developing. For example, transportation business called Solistica, and other minor businesses, but this has translated into more cash for the company. And this is particularly one question by the investors, that what will FEMSA do with all that cash, because they have enrolled in M&A operations with the Delec US holding acquisitions in Texas. They have made several dividends, ordinary and extraordinary, and they have established a buyback program. And even though they hold a really strong cash position nowadays, so I think the main focus for the investor will be in these two ways: the development of these operations in the US, that they are literally going from zero with other convenience stores that were from other competitors in the US, but also what will be the next announcements of FEMSA regarding this cash position, because it's a really robust position in cash that has been there for quite a few quarters, and it's beginning to highlight in investors.
Interesting. Yeah, it's a good problem to have, though, as an investor.
Yeah.
So, should we talk a bit about the tech, the third business line you mentioned? Is that accretive? Is that worth talking about, do you think?
Well, I think Digital FEMSA, it's like the area for their new initiatives, digitals, and maybe they fail, having some successes in some initiatives, maybe having some failures. There's no problem. I think it's the space they use to deliver or develop financial services in a digital form that practically they will be adapting to the OXXO stores, because it's important to highlight that the OXXO stores began offering categories that were like the consumer staples, groceries, perishables, and that's all. After the pandemic and after a higher demand for the consumers, they began to add other categories like general merchandise, beer, and all that stuff that were like, I think they were like a little convenience store in a closer way that, for example, the retailers like Walmart or Chedraui, we have these restrictions to go out from our homes, and the OXXO was like the closest store to satisfy any basic need. So I think they adapted really well to these conditions, and I think the step that they are looking for OXXO and this digital FEMSA, it's applying these digital initiatives and services in the store. No, they have several loyalty programs. For example, Spin OXXO Premia, which is a really robust loyalty program. And they have like the capabilities and also all this information from its customers with this, as you just said before, these frequent visits to the store. They have really robust data from their client, no? So they can even have like a real defined customer profile, and having this in a clear way, they can attend its customers in a more approachable and decent way.
Okay, interesting. So let me wrap it up like this for FEMSA, because I didn't ask you about valuation yet. So if you had to own one of the tickers, either the pure bottler or the parent company with OXXO at the current valuation, and you can only own one, which one would you own?
Going to 2025, I would own FEMSA. Currently, I have a preference for the bottler, only for the bottler. But I think going to 2025, I'm really interested to see how FEMSA begins to develop and begins to make these U.S. operations accretive for its results. Also, this, as you said, the development of the OXXO brand in LATAM is something that I think it has quite acute potential going forward. I would play more in a defensive way. I will go FEMSA for 2025.
Interesting. Cool. So let's do another retailer. I'm going to let you introduce them because I tried to pronounce the name once, and it's the founder's last name, correct?
Yeah.
Okay, so tell us about it.
Yeah,
it's a publicly traded company too, so preface with the ticker if you would.
Yeah, it's Grupo Comercial Chedraui, which trades with a ticker CH in the Mexican Stock Exchange, and as you said, it refers to the last name of the founder of this Mexican retailer. And I think personally, it's one of the Mexican retailers that is better positioned to capture this still presumably positive landscape for consumption in the diverse regions that they operate. As I was saying, it's important to highlight they were just added a year ago to the Mexbol index, to the sample of this index that it seeks to replicate the largest and most liquid stocks in Mexico. And they were also added just a couple of months ago to the MSCI Mexico index. So this gives a greater exposure to international investors. Already local investors know really well this retailer. But I think it's important the exposure to international investors in a way it can be a more known name, considering they have a main advantage against its competitors. They are the only Mexican retailer that operate in the US, and they operate in a really profitable and strong way. And I will talk about a little bit about this operation in a couple of minutes. Talking about Mexico, it's a retailer that attends lower, medium, and higher consumers along the country with 5 different formats. The supermarkets and hypermarkets that are Chedraui and Super Chedraui, and they offer a wide variety of categories and products like perishables, groceries, general merchandise, apparel, etc. They have also some proximity formats, which are smaller formats, Super Che and Supercito. And these are formats that offer a lower number of categories and products, but they are really also profitable. They are, in a way, similar to the OXXO. They are really close to the consumer. And they also operate 36 stores named Martelli. It's a store chain that they just acquired in 2022. It's also the retailer that has been the most active in the M&A arena in the last years. And they also operate 17 stores in a joint venture under the name Smart and Final, also in the northern part of Mexico. And this format is quite interesting because it's a store that operates as a club store, but they don't charge a membership fee to the customer. So it's quite a little bit hybrid of this kind of formats of being a pure retailer and a club member store. And also, I would like to highlight the Selecto concept. It's their premium concept. They apply this concept to several formats in Mexico, and their main goal is to attend the upper class in Mexico. They adapt this concept to Supercito, and you can have like an OXXO premium more closer to you, and also they apply this Selecto format to Chedraui and Super Chedraui. That for Mexico, and they operate approximately 480 stores along Mexico. And I think the main advantage for Chedraui will be that they have an important operation in the US. They operate with 3 different formats, and their main goal is to attend the Mexican-American population in several regions there. They operate their first format called El Super, which are 60 stores, and they are in California, New Mexico, Nevada, Arizona. They also operate another format that was acquired in 2018 called Fiesta, which are 67 stores located in 3 top cities in Texas. It's Houston, Dallas, and Austin. And they also operate 255 stores under the brand name Smart and Final, which also it's like the one we just mentioned in Mexico. They attend small businesses and individuals, and they are based in Arizona, California, and Nevada. The main goal for Chedraui in the US is to attend the Mexican, American, or Hispanic population there, even though there is also a quite competitive and aggressive competition there at the US with several retailers that also try to focus on this population.
So is that like a niche product offering then? So like, is that targeted at Mexicans that live in the US, and it's like Mexican brands that they won't find at the American grocery store?
Yeah, well, they operate approximately 380 stores, and basically the offering it's like a retailer. They offer perishables, groceries. They try to replicate some of the look and feel of the stores in Mexico in the US. So this could be like more appealing for this type of consumers. And also they include some Mexican brands in the US. So that's like the main trigger, or like the main strategy of these formats to attend this population.
Got it. So what's a digital presence look like for a Mexican retailer then? Like, are they doing delivery sales? Like, are the delivery apps a big deal for a Mexican grocery store, or not so much?
Yes, I think the adoption of this kind of operation was it stayed after COVID. I would highlight in that sense Walmart, Walmex of Mexico and Central America. I think it's the player that it's way far away of their competition. They have been delivering or constructing an omni-channel ecosystem that goes not only for the delivery of products to the customer's house. They are including some financial services. They also are including some services regarding remittances. They also are including a business vertical called Walmart Connect, that it's a focus on marketing within or inside the store. So they are like building a really robust ecosystem, omni-channel ecosystem that it just not only considers like the delivery of products to the customer's home. They are like having a really well a lot of services that are including in their ecosystems that I think yes, it's important for the retailers in Mexico, but in different degrees. For example, Chedraui has developed its own omnichannel strategy, but it's way too far from what Walmex has developed nowadays.
Interesting. So they've been fairly active historically making acquisitions, correct?
Yeah.
So do you expect them to be active in the near future?
Well, Chedraui is the most active retailer in the M&A opportunities for market consolidation. We just talk about some acquisitions in the US. They just started with El Super, and in 2018, they acquired Fiesta, and then in 2021, they acquired Smart & Final. So they have been also constructing this presence in the US. Even though the management has been the most active in these opportunities for inorganic growth, I think the stance or the approach of the management will be the ones they just have always repeated in their conference calls. They attend these opportunities in a cautious and analytical way. They always try to be aligned in valuation. If the new opportunity is accretive for its results, if it makes sense to expand to other regions, because as we saw, they are really located in regions that it's highly populated by Mexican American population. So I don't know if there's like a little more space to expand in these regions by acquisition of other formats. No, I think this stance will remain in the coming years, although they also always said that they are open to discuss or to analyze any opportunity in the M&A themes.
Cool. So how are their financials then? I know earnings came out a few weeks ago. So how are they doing? Are they financially healthy? Numbers look okay? How would you?
Yeah. Even though they have been really active in the M&A, their net debt is really healthy levels. So they are capable to the leverage, even though they have like several momentaneous spikes in debt due to these M&As. This is not the case for Chedraui nowadays. They are really healthy in the balance sheet. I think going into its financials, I think it's important to highlight Mexico and the US, the results, it's a 50-50. Chedraui is split in a 50-50 sales and EBITDA for Mexico and the US. So it offers an opportunity to take advantage of several consumer conditions that are maybe mixed in these two regions. For example, nowadays the US shows a consumer that is more cautious and tries to get more discounts and promotions than a Mexican consumer that, even though it's cautious, it's not so cautious as the US consumer. And also we have to take into consideration the FX impact when there's a significant depreciation of the Mexican peso against the US dollar, but the US operations are benefited. But talking about the financials of the last quarter, I would highlight that Mexico is still pretty solid. So Chedraui has been characterized in the last years of having a performance in the same-store sales that outperforms its competition, and this obviously implies market share gains in the retail market, even though it's not the greatest or the largest competitor in Mexico. So this makes really quite interesting this name, no? In profitability, Mexico is also really operation. It's really good. It's the inventory management. It's quite solid, quite impressive, and also these operating efficiencies have been coupled to offset or mitigate some pressures on the SG&A line. specifically in the labor costs. And we were just talking some minutes ago that maybe the increases in the minimum wages and all that stuff could represent pressure in the SG&A for retailers. Well, it's the case nowadays for Mexican retailers, and they are being able to offset this pressure by efficiencies in inventories, in promotional activities, and also in its operation. So the Mexican operation is quite pretty solid, even though this softer than expected consumption environment in Mexico, that I think it applies more to the discretionary consumption. Basic consumption has been the most resilient, the more defensive, and I think it will remain in that way for 2025, no? And the US, it had a mixed performance. In the top line, they had a recovery due to this depreciation that the Mexican peso had against the US dollar after the June election. But they have their first contraction in EBITDA margin, and this was due to some additional costs and expenses. They just began operations of a new distribution center in Southern California, and this implied like a real big pressure hit to its numbers. So this distribution center is aimed to work or to supply what 5 distribution centers were doing in this region for specifically El Super and Smart and Final formats in Chedraui. And well, it's encouraging to see that the Chedraui tries to have some efficiencies in its supply chain, in its logistics, even though they accepted this hit for the results. Even though I think that hit in its margin expansion in consolidated terms, I think it's they were quite defensive, the results. I'm not worried about Chedraui's capacity to deliver a turnaround in the US because well, the 50% of its operation it's quite solid. No, Mexico, and I think the management has proven in last years that they have the capacity to make the turnaround in the US. They have made it in the formats that they operate. They have leveled the levels of EBITDA margins that their format shows. Principally Super and Fiesta, and they are in the way that Smart and Final will reach those EBITDA margin levels that these two other formats have, and they have been really successful in completing this.
Interesting. So what are you looking for then over the next few quarters to know whether the turnaround's doing well, if things are on track? What do you think the drivers are?
I think the drivers for Chedraui will be basically this condition, no? The way that it could materialize this apparently or presumably efficiencies in logistics, maybe not in the next couple of quarters, but in the medium term, that it could be like material for its US operations, and maybe the way they will attend is a more cautious consumer in the US. It has been quite for a few quarters, these consumer habits, there have been more cautious in the US, with same-store sales growing at a lower pace of what they were looking for in the last year. So I'm also interested in seeing how they adapt these offerings in these formats for this more cautious consumer in the US.
What do you think about the current valuation then? I mean, the stock price has had quite a run. You know, I'm looking at the chart now. It bottomed in peso terms around 20 to 25 in April of 2020, and it's currently around 130. So it's done, you know, a 5x in 4 years, give or take. So that's quite a run. So has the valuation got ahead of it, or do you think it's fairly valued? What do you think?
I think Chedraui still offers a a rational risk reward profile. I think it's fair. And as you said, I think it was the retailer that took more advantage of the pandemic. Since the pandemic, the stock price really went up in a very fast growth rate. And recently it was the most, it was the stock of the Mexico that had the best performance in the year. I think it's not quite these conditions nowadays. There have been some other names that have been also having great performances, but Chedraui, I think it's a well-positioned retailer, and I repeat, I think the US operations give this retailer a really competitive advantage against its competition here at Mexico.
Yeah, it's a really interesting company. I'm glad we covered it because it's a niche, right? It's not the biggest market player, but it's an interesting story. It's compelling.
Yeah.
So is there anything about them we didn't talk about that you think is worth mentioning before we wrap up?
Well, I think for in general terms for consumption, it's clearly a softer than expected environment in Mexico during these 6 months after the election. That's no surprise for anyone. We were usually expecting that dynamics for 2024, a really strong consumption before elections. More normalized trends in the next months. But all in all, I think the key drivers for consumption are still in place. So it could be bumpy for in 2025. I think 2024 has been characterized by these ups and downs in consumption. I think 2025 will follow this trend in a similar way, maybe in a more gradual way, but very similar. And I think the basic consumption or consumer staples that it's the categories or products that offer these retailers or even Femsa at OXXO, with also the Coca-Cola bottler. Coca-Cola, it's like it's one of the basic products for the Mexican consumer. That's also no surprise. Yeah. So I think the consumption will be in 2025 with this soft environment, but I think it still remains in a pretty solid place. So I don't have any major concerns about these conditions.
Cool. Well, that was really interesting. I thought both those companies are Femsa and Chedraui. They're very compelling. Yeah. I'll get it by the next time we do. But I thought they're both really compelling, and it's an interesting market. So I'm really glad we did this. Where can I send listeners to find you, follow some of your work, connect?
I think my LinkedIn profile is the best source to get in contact with me. Also, I will be more active in LinkedIn because I have been not so active in my profile, but I think that's the best source to find me.
Cool. And I'll link that in the show notes for anyone listening so they don't have to search. Thanks again for doing this. I really appreciate it.
Thank you, Patrick.
Be good.